Your portfolio management style is different, and what are your USPs?
Okay. So basically, we try to strike a balance between growth and stability in our portfolio. On one hand, we have a suitable exposure towards large cap who are resilient, who are who compound your wealth during the course of time, and who provide stability and resilience to your portfolio. And on the other side, we have mid and small caps, which are actually our USPs, because we make a lot of efforts in finding companies which have huge growth potential. We try to capture the newer dynamic opportunities across different sectors, be it digital marketing companies or companies in EVs. We try to figure out what trends are there in the markets. We try to play on them. That is mainly our USP, basically, to be as dynamic as possible and to focus on finding companies which can potentially give you larger returns than the market can offer.
How would you like to highlight your and your team's credentials?
Okay, so we have a highly qualified team. Starting with my team, it comprises of around 10 to 12 research analysts, and their qualifications are basically they are chartered accountants or CFAs or engineers or a combination of both, and they have different skill sets and different exposures, and we allocate different sectors to different people as per their previous experience or knowledge or proficiencies. So we are a highly diversified and qualified team. And talking about myself, I am a gold medalist chartered accountant and a gold medalist company secretary. And post that, I had also did MBA from IFT Delhi, which is a top 10 B school of India. Before joining him Securities and heading portfolio management services, I was with Axis Bank in the dealing room. I used to handle bonds and forex. And before that, I also interned with Goldman Sachs in the investment banking division. So over and all, we are a team of proficient and qualified bunch of guys who are interested in giving outstanding returns to our investors through equity markets in India.
How has been the performance of portfolio management earlier?
So in the last couple of years, we launched on 4th of March 2020. So that's exactly 2 years back from now. And the performance has been phenomenal. Markets were also kind at the beginning after the COVID meltdown, but we distinctively outperformed the market. Our returns were close to 81% since inception till December 2021, against around 54% of Nifty. 50 and around 58%, 59% of Nifty 500. So we beat the markets by more than 20%, both the broader markets as well as the main index. And we were, one of the in the multi-cap space where we began our journey from through our strategy called Dream. It translates into dynamic research and emerging asset management. We managed to outperform a lot of prominent names across India. So that is a very comforting factor for our investors. And we have seen the falls and rises and so much volatility in the past couple of years that it has added a lot of experience and vitality to our portfolio.
How you will be matching your schemes to different risk profile of investors?
So we have two strategies. One is strategy for which I just mentioned the returns was a multi-cap strategy. We have just now launched a SME and small cap strategy as well. The name is IRSS. It translates into India's Rising to SME Stars. So through this strategy, we are trying to find out small companies, micro caps, SMEs, and small caps, which have the potential to grow, compound your money multiple times, maybe give 2x, 5x, 10x returns. So this is suitable for the investors who are willing and who have the pockets to take measurable risk, because this is a high risk, high return kind of strategy. There might be instances where liquidity can be an issue if we try to exit these companies. At the same time, we need a portfolio manager to analyze these companies, because there are a lot of companies who have the potential to give outstanding returns, which are otherwise not possible in the broader market, especially in the large and the mid caps. So as per the risk appetite and pockets of investors, the strategy will differ. For a stable and consistent returns, we would pitch our multi-cap strategy. And for the people who want to diversify and who have risk capital and appetite, we pitch IRSS, the small and SME strategy.
What is your strategy for growth?
Strategy for growth is basically finding out really good companies who have a sustainable business model, which we understand, for which we can, envision or we can see what is going to happen in those companies 2 years, 3 years, 5 years down the line, which are in the maybe in the sweet spot. And revenue growth, we are extremely focused on the revenue and bottom line growth. We like companies which are growing at the rate of 20% or more, and with healthy ROE ROC ratios. There might be certain exceptions to this rule as well, but we focus on companies which are giving more than 20% growth year on year and who are valued uh, cheaply. So the current market, if we leave out the January and February months, the markets were extremely expensive. So nothing was available at a cheaper valuation, especially any good company. But we try to focus on the valuation part as well. The justified valuations at which we can enter a stock. This is our growth strategy basically, to focus on fundamentals, revenue and the return numbers, to focus on valuations, and to see if we understand that business and what is the future outlook of it.
What are the challenges?
Okay, so challenges will depend on the market circumstances of that time as well as the sector you are entering into. Each sector and each day has different flavor to it. If you're talking about equities, they always keep you on toes, they always keep you busy, right? So you have to constantly figure out what strategy works best for you. And once you achieve some kind of comfort with your management style, allocation style, and picking the right companies, then maybe you can mitigate a lot of day-to-day challenges, and you can stay focused on the long-term compounding, long-term growth of your portfolio. The most important thing is to have conviction in whatever you are choosing. And so stock selection and allocation are paramount. Um, Rest, I think equity markets, capital markets, or the life even is full of challenges. Someday there is a reaction to COVID. Sometimes political statement, give some kind of reaction. There are geopolitical risks. They keep happening, and they will keep on happening. We don't get disturbed by the day-to-day challenges in equity.
How do you look at the opportunities for portfolio management services?
There is a huge scope for growth, and if you see, we are as a PMS, in our country has been growing at a rate of more than 20-25% CAGR in the last 5 to 7 years, because we are an emerging country. The risk appetite as well as the potential to invest in the market is increasing, commensurating with the increase in GDP and the per capita income. So there is a huge potential, and this is clearly reflected by the new demat accounts which are being opened in the there is a CDSL data coming up every month, and we can see the number of demat accounts have tripled in the last couple of years, I guess, from under 3 crores to more than 8 to 9 crores now. So there is a huge and still it's a minuscule part of the population of a country of 138 crore people. So there is a huge scope for growth, and people, since PMS specifically is related to HNIs and ultra HNIs. Usually the profile of these people are of nature where they are extremely busy towards their own or in their own occupation or profession. They need a reliable manager who can manage their money in an efficient manner, in a transparent manner, and who have the capability to generate outstanding returns. Then they are ready to pay a fees for it, which we charge, right? So ultimately, it's a growing market, and since we will be reaping fruits of demographic dividend as well through different growth cycles. I think this is a market where there is a huge scope for opportunity.
What are your views on the bonds? Means how you can safely get to good returns?
So, as part of our mandate, we are not investing in bonds, and we are specifically investing into equities. Bonds is a completely different instrument. You can use it for diversification, and it can be used. The proportion will be different for every individual based on his risk profile, age, and what a rate of expectations he or she has in the markets. So yeah, you can diversify through investing in bonds, but you have to take care of the uh, credit rating, or if you're investing in corporate bonds, you have to see which company is issuing, what is the profile, and how safe you are. And if you're investing in sovereign bonds as part of diversification, I think there is no risk over there. Yes, you can definitely diversify. But we are
You-
focused on equities.
How you can provide better returns than Nifty 50 and Nifty Next 50?
We are providing consistently better returns. There might be some exceptions here and there, but we are over and above performing. Really high growth numbers as compared to the markets. And why we are able to do that is because we are cherry picking good stocks which have the potential to outperform the markets, which have the potential to grow. And once stock selection, you make it the bread and butter of your portfolio. I think then if you can complement it with suitable allocation, I think you can beat the markets. However, it is extremely challenging, and beating the markets is not easy on a consistent and a longer basis. But we are trying our best to find out good opportunities and to manage the funds appropriately.
Do you think it's the right time to go for investment in stocks internationally?
Internationally, see, we don't track the international equities. We track the international market, but not the internationally listed shares precisely or as deeply as we are tracking the Indian ones. So if an investor has surplus money, then he or she may think of diversifying a smaller portion towards different asset classes or different markets of the world. And but if I talk about Indian markets, we have a bias and we have an inclination towards Indian markets. We are one of the fastest emerging markets in the world. Our equity markets are also giving really good returns. We trade at premium valuations if we compare to the other emerging markets or even the broader global markets. So I think we are pretty much focused on investing in India more than anywhere else.
What is your advice on investing in gold?
Again, if you see the CAGR of gold and bonds, and if you see the FD rates, equity markets are much more better poised to give you good returns, outstanding returns than these other asset classes. There is risk element as well in equities, but traditionally they are continuously and they will continuously outperform the other asset classes. So the kind of returns which equity markets can give you if you go with the right stocks, and if you stay invested for a good number of years, if you manage your money properly, then the kind of returns you'll get in equities you'll get nowhere else. So we don't focus on bonds and gold and everything else. Yeah, gold can be a part of your strategy to diversify your risk, especially in inflationary environment. But the kind of returns which gold has been able to generate in the last 1 or 2 years is not satisfactory. And you can allocate a very small part to it to just to diversify risk and nothing else. Main core portion of an investor can be equities.
Would you like to invest in digital rupees, sovereign bonds, and cryptocurrency for safe and better returns?
How is cryptocurrency a safe returns?
That is
So
where we are
cryptocurrency.
asking.
So cryptocurrencies is we will can never be categorized as safe return options. They are highly volatile, and hardly people understand the dynamics behind the prices. And there is no business at the it's not reflecting any business or a growth in a particular sector or company. So it's very difficult to understand how they play, and it's a simply demand and supply rather than anything else. So it's difficult to study and understand. So we are quite far from cryptocurrencies as of now. If we talk about bonds and you mentioned sovereign bonds, right? So sovereign bonds is a risk-free investment. If you are happy with some part of your folio fetching you 6.5% yield annually, then you can go for it to diversify. What is the third asset class which you mentioned?
Digital rupee.
We are yet to understand. Let it come into play first, and we'll go through the how it's functioning and what will it will be too early for us to comment on the digital rupee front.
Now, Russia-Ukraine war has opened new opportunities for investors. So, what are your views on that? How it has affected our markets, and what are the scripts worth watching?
It is an unfortunate event, but definitely there is an opportunity, especially in the mid and small cap segment. The good quality stocks across different sectors are thrashed right now, and most of them. I read somewhere that 37% of the Nifty 500 stocks are down by more than 40% right now, 30 to 40% right now. So you have to cherry pick again. You have to hunt for good stocks in good sectors with robust growth, and definitely there is an opportunity to add funds to it. Having said that, the situation is unfolding. It is pretty much not clear right now how the markets are going to pan out in the next few days. We are hoping for a ceasefire soon that can act as a breather. But right now the situation is extremely, it's keeping everybody on toes. Market is up in the morning, suddenly goes down in the second half, or vice versa is happening. So right now the direction is not clear because of this unfortunate event, but it definitely is an opportunity to add good quality stocks and make a folio. And if you have some capital, I would advise not to invest everything at one go right now, but definitely you should invest some part of it. We have already corrected 9-10% from the peak, and the small caps and the mid caps have corrected 40%, 30% from the peak. You can cherry pick something.
Any other important point or experience you may like to share?
Yeah, definitely. Not to panic when the markets are going down. Sometime it will be an impact of a pandemic. Sometime it will be geopolitical tensions, but it is important not to panic and sell when the markets are down, because that's where you're incurring long-term or short-term loss to your portfolio. Because the cost of adding the script back, after you sell it at a loss, it will pinch your pockets even harsher than what you expect. So it's important to stay invested in good companies, to not trade or invest if you are not sure where you're getting into. Valuations sooner or later come into play, so invest accordingly, and don't trade in companies on the basis of hawa bazi, or on the basis of thin air. Understand the companies before investing, and if you're not able to understand, if you don't have the time or the expertise, you can go to an advisor or a manager, portfolio manager, and you can take decisions accordingly. Stay invested in good companies for a longer term. You will compound your wealth, because we are a growth market. We are the fastest emerging markets. There are a lot of good things also happening, like PLIs and superb GST collections. You have Gati Shakti, 100 lakh crores pipeline infrastructure projects, right? So it's important to find good opportunities and stay invested, and don't panic.